What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, let's dive into Bitcoin here on the weekly time frame. So, when we're looking at this from a weekly perspective, there's a couple things we need to keep in mind. One, this drawdown is completely healthy because we've already risen for the past 7 weeks prior to this. We were due to come down and form a higher low somewhere above the previous low here from 29,254. And the reason why I think we're going to form a higher low here is because of the magnitude of this move. So you can see that we've risen over 81% from our low here. Very significant. And so for us to come down is just a matter of, probability. The higher we go without forming the higher low, the higher the probability gets that the week that we're on is going to be the week that we form that high. And I said that the last few weeks I've been talking about our high potentially getting set really soon, and that is what we're seeing right here. Now we have our weekly high right up here, and now we are looking to potentially form a higher low here, either with the low that we just set down at around 42.7, or if next week we go down below this low again and dip below that, then we'll see if that's going to be the higher low. But ultimately, the target that I'm looking for is, now that we've drawn down as much as we have, we need to consider if it's likely that when we come up, we're going to form a higher low. Now we've drawn down about, from our high to our low here, about 19%. So for us to rise up and form a new higher high, we're going to need to go about 24%. So if we do go up from here, I think we could end up seeing, it's not a guarantee, but we could end up seeing a potential equilibrium pattern where we come up, form a lower high, come down and form a higher low. So we'll do something like this. Oh, can't find my brush. Here it is. So we may come up, form a lower high in comparison to this one right here, and then come down, form a higher low above this one right here, and then come up and make a higher high thereafter. So that is what could potentially end up happening, but we need to keep in mind that this weekly candle still needs to close relatively bullish if we want to see this play out. But I think that it likely will, just based on the fact that the lower time frames, like the 3-day and the 1-day, at least right now, look pretty good for a bounce. So this candle will close in 4 days and 2 hours, and that's what I will be watching for. If we look at the VPVR, we can see the volume. This gives you a volume profile based on the horizontal prices that we're looking at. So if it's longer, sticking out more versus something like this, there's more volume at that price level. So you can see there's a lot of volume up here at around $56,150 up to about $58,000. There's a lot of volume also right around the range that we're in. And then there's a lot of volume down here going from about 41.6 down to about 33. So you can see that the most volume is down here at about 33.4, and then second to that is right about here at about 46,005. So what you can do is you can kind of use these as a guide that if we go up, there's pretty much a gap in between 51 and 53.5. So if we go up again, we'll likely see kind of what we saw here, which is once we started to go up, we almost wicked up to that zone just on this candle. And so you can factor that in. It's also, important to note that we had this drawdown that almost gapped, cleared this gap of volume in between here and here. Didn't quite get there, but almost did. And so looking for those gaps can kind of give you an understanding of where the price might kind of push through very quickly, versus the longer areas. These more robust areas are showing us where the price may stabilize or slow down at once it reaches those points. So let's go down to the lower time frames now. If we look at the 3-day time frame, we can see that we have a bullish support zone here that we're looking to potentially bounce off of. And so this is from our bull trend right here, where we had a low, high, higher low, because we broke the low of this low, and then higher high right here, with both this candle from September 1st and this candle from September 4th closing above this key high from August 29th. So that makes this last down candle before this up move, where we confirmed the bull trend, the area for support. So now what I'm watching for is where this 3-day candle is going to close in 1 day roughly. If we close below it, and then subsequently in the next 3-day candle we close below it as well, then this will end up turning into a resistance zone for price. But if we close back inside of it, which I think is the more likely scenario based on the single day time frame, then this will end up being support and will push price up again above about $50,000. So that's what I'll be watching for in the 3-day time frame. Very simple. Aside from the gray resistance zone, that once we do end up going above this zone and closing 2 candlesticks above it on the 3-day time frame, this will end up being a support zone for price. You can see that it was support back here twice, and then once we came over here, resistance, 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 resistance. So we've tested it 4 times. So at this point it's a matter of when are we going to go above that and close above that. Once we do, then we can likely see that turn into support. If we go down to the 2-day time frame, an interesting development here that I really like to see if I'm a bull is the super guppy indicator, which is finally flipped to be bullish, and we're seeing these longer lower wicks of people bidding on these investor EMAs down here at about 45K down to about 42.6. So these areas typically have provided a lot of support for price. When we come down into them, you can see that when we come into the green zones here, we're bouncing. And then as we come up, here's a couple other examples. Here's another one. Here's another one. Here we had somewhat of a bounce, but then here we had another one. And then another one, and then finally we broke through it there. So now that we've flipped this to be bullish, now we will likely see a bounce here as well. And this is something that is very good news for the bulls, because these are starting to expand. You can see they're really close together here, and now they're starting to expand. So these longer term EMAs take a while on this indicator, which is a collection of EMAs, to flip over to be bullish because they move so slow. So you can see how long this period was from flipping to bullish to bearish. It took, about 60 days, so 2 months. And now for this to flip, back to bullish, if we measure it from all the way from going away from bullish to back to bullish, we had, 98 days. So almost 100 days in between, May 17th, where we had this significant drawdown, to where we're actually back to being somewhat bullish here. Pretty bullish, I should say. So this is something that I'm looking at in terms of a bidding opportunity. If we go to the daily time frame, we can see the super guppy is also looking very good here, and this is an area I've been talking about bidding on for quite some time. Still bidding in this zone myself, buying some Bitcoin inside of these investor EMAs because I want to participate in the trend. And so once you come into zones like this, you can see based on these longer lower wicks that people are buying the dips down here. So what that's telling us is these EMAs are providing support, and there's people that are willing to bid on these EMAs. So we'll likely see a bounce over the coming days if this candle closes the way that it is right now with this longer lower wick. So we opened up here at about 46,900 roughly, and we went all the way down to 44.4, but we've bounced back significantly from that point. So that's an important thing to note. And this is the first test of these investor EMAs since we flipped them over to be bullish. And you can see the single day EMAs provide really good opportunities here. Here's one right here into the investor EMAs, the red ones here. Here's a short, here's another short, short, short. On the bull side, it's the same exact thing I just showed in the 2-day time frame. Long, 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 until it doesn't work anymore. So, simple way to play this is literally just go long on the green EMAs until we get a candle close below the EMAs. It's very simple. And if it flips over to be red, go short on the investor EMAs until, you close above them right here. So very simple strategy that I like. Single day time frame super guppy. Another thing to look at is the Ichimoku cloud, which is setting up in the coming months to see this being the most bullish scenario that it can be in. So if we see that weekly time frame start to play out with a higher low and then a higher high, this will likely be in a good position to support that, given that the cloud is finally flipped to be green. The Tenkin, the blue line, is outside of the cloud and above it, and the Kijun is working its way up slowly. You can see that here. It's kind of just stair-stepping its way up. Eventually, once this gets above the cloud, the Kijun, and the price is above the Tenkin and the Kijun, then we're in the most bullish scenario we can be in, as long as the cloud is still green as well. So that'll be something that I'm looking for in the coming days. If we go down to the six-hour time frame, this is a main resistance level up here, up at about 49,600. So if we do end up getting a daily push up, and we don't stop somewhere inside of this blue zone, which is that 3-day bullish support zone, this is going to be the area that I would expect price to reject off of. It's up at about 49.6 to about 50,400. You can see based on the longer lower wicks here that people are buying down here, and you can see that price wants to trade up. So this is something to keep in mind as we look at these lower time frames. You can kind of use these as a guide to see what are the daily time frames and things like that going to look like as well in the coming days. And then the last thing I wanted to say was related to the pivots. So if we look at the pivots indicators, you can see we're also bouncing off of the hourly pivot level here, the S2, which we've bounced off of twice now. And so this zone is pretty much holding up nice for support. And the other thing I wanted to note is that pivot inside of that gray resistance zone right up at about 50,100. So that zone is going to be an area that I really do think will reject off of, at least on the first test, if we do end up getting up to it. And that's something that I'm keeping an eye on. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And if you haven't already, check out our Telegram channel that we have a link for in the description below. This is a global community that you can assimilate with and learn from. We do weekly Sunday Zoom calls where we discuss a variety of crypto-related topics that are salient and powerful for our community members to learn about. Things like how to use decentralized applications like Anchor Protocol and other ones that we learn about. And then also just talking about crypto-related news, different projects, different prices, different things, really anything related to cryptocurrency and blockchain and everything in between. We have members from over 15 different countries, and you can join that for free using the link in the description below. All right, guys, until tomorrow, onward and upward.